Hey everyone, it's Clayton Roche again, the head of DeFi with Mosendo, and I'm joined here with Toma, who is the head of BD with Pokket, and he's going to tell us what Pokket is all about. And I think it's spelled P-O-K-K-E-T, is that right?
Yes, yeah, it is. So, the URL is a little bit hard to find nowadays in the crypto space, but it's a pretty good one, I think. So basic overview is just it's a fixed deposit service. It's a lot sort of like Celsius in a sense. However, we have weekly. It's basically weekly fixed deposits. So you cannot move in and out outside the week, outside the 7 day settlements.
Okay, so maybe walk me through what it might look like for a lender to go on to Pocket and provide some asset. What would that
Oh,
experience be
so
like?
uh, so the whole, if you notice on the Pocket site, if you go there, it's actually a really simple site. It's not like a very typical crypto site, and we weren't going for the typical very flashy stuff. It's actually very simplified, just so that people know exactly what the purpose of the product is. It doesn't do this and that. And basically you create an account on Pocket, and then you can deposit over 20 to 25 different ERC20 tokens. We're hoping to expand with other tokens later on, other chains. So right now, we've been sticking with ERC20, and you make your deposit on once you generate your account. After about maybe 2 minutes, you should see it come in. And so, what do we do with how we give you the interest rates? Or it all depends. So, depending on our borrowing rate and how much we're actually deploying on our assets, and how much demand is. So, some of the things, Bitcoin is around 3.99 APR annualized. Ethereum around 4.9, but and then some of the more illiquid coins, maybe like Dent or one of the other ones, can give you higher interest, 10%. And people wonder how we're able to give these interest rates, how we're able to do this, is because we work with third-party borrowers, actually. So you only deposit on Pocket to retrieve interest, and then we lend it out to trusted. We actually only work with hedge funds and experienced OTC trading desks. The reason some of the coins fluctuate is because mainly these funds are using these coins for liquidity for their trading. So a lot of them is the biggest demand we found is the Pocket is actually based out of a need from the team is actually at multiple about like 10 or 15 years in financial trading
Hmm.
and traditional and security equities, typically like Nomura Securities in Japan, and the main office is in Hong Kong. And so one of the family offices actually started getting into crypto trading, and they were doing quite well. However, they had a liquidity problem. They had all these massive arbitrage opportunities that normally, if you're not in Southeast Asia, you would know that there's so many capital flow restrictions in these countries that stable coins are the way that people move their money out, whether it's an arbitrage opportunity. Like an interesting note, I just spent about a month and a half in China, and I went throughout, and it's illegal to buy on the exchange, but it's not illegal to buy Bitcoin or crypto from a person. So
Hmm.
everything is actually P2P. So what everyone does is all through WeChat,
I
and
see.
basically from their movement, they move their Tether. It's mainly in Tether, USDC, um, and Circle, a few top three stablecoins,
Hmm.
but they use other coins, and then they move that out into Hong Kong, and it's other countries like Vietnam or Thailand that have military juntas, they have the restrictions. So that arbitrage where you can be in Hong Kong trying to move funds from doing the arbitrage opportunity from China to Thailand using Tether, it may be half a percentile, but when you're doing a $1 to $3 million trade on that, it's huge margins. And this is repeatable, replicatable, and it's actually it doesn't matter about the market because these people don't care about the price of Bitcoin. They just want to be able to move their funds out of the countries. And
Wow.
so,
Okay. And so you've talked a lot about kind of the specific niche that Pocket is filling from the borrower's perspective, it sounds like there's a little more going on than just shorting or going long on a particular asset. It sounds like it's filling a different need than just that. Is that right?
Well, it's the fact that the services like Pocket, Celsius, or even the whole DeFi movement, I think, didn't exist without stablecoins. You weren't able to do complex financial leveraging, financial instruments, or creating debt positions without a stablecoin.
For sure.
And basically, this started a whole wave. And it's these institutions are still quite old, longer. So it sort of dependent on when they were catching up. And right around 2018, how many stablecoin projects like received funding? Like maybe 20 or 30 bases for like 155 million, ended up having to give it all back. A few worked, few didn't. But basically, the market had to see which stablecoins are going to be last besides Tether. And that's why even now, Tether is one of the oldest coins. People hate on Tether, but whether your opinions about Tether is full fractional banking, whether you agree with it or not, I think that's like a crypto philosophical debate.
Mm-hmm.
That's not it's not a technological debate. It's not a question of can I do this or not. You can do it. And basically all of these instruments are doing it. And honestly, if you're a hedge fund guy and you're just trying to make a great trade and you want liquidity, you really don't care if it's Tether, USDC, or an ERC20 token. You just see an opportunity and you need a liquidity pool. But the main issue is that only in the past year, stablecoins are still only 2 to 3% of the global crypto market cap. So that's why we have been supporting ERC20s initially.
Okay, so what you're saying is that people are actually borrowing a token, an ERC20 token, simply for the liquidity so that they can move funds around the world.
Well, no, they're doing it because some of the ERC20s are very illiquid. After they had these ICOs, they got on these exchanges,
Sure.
There's no liquidities and there's no trading volume. However, that's still great arbitrage opportunities on this.
Okay.
And so that is what the main purpose on the financial speculator side is. And so on the lender side, I'm not a speculator. I'm a boring guy. I like to hold. I don't want to trade every day. So I like to buy my things, put in some service, and I forget about it.
Sure.
And that's the niche that we fill. And so actually, the interesting thing about Pocket is that we collateralize all our lending. All your crypto is stored in cold storage the second you receive it. And for us as a borrower, you have to provide 110% over collateralization in TUSD. We use TrueUSD as our stablecoin.
Okay, so they have to, and that's the only one you accept is TUSD.
Yeah, no, for now, they were just we initially used them. We didn't even ask them to use it. And then once we were using them, they liked what we were doing with their token. And they're like, hey, we'd like to officially partner.
So this is interesting. So you're kind of switching the formula around. Like I'm used to people who, most of the lending platforms you might deposit. Well, I guess you can deposit stablecoin collateral or like Ethereum, for example. But like I think the model that people think of in DeFi right now the most is people that would give Ethereum as collateral or another volatile asset, receive a stablecoin so they can either use that stablecoin to cover daily expenses or go even longer on that asset like Ethereum. But you're talking about people that are actually staking a stablecoin and then borrowing these volatile assets, potentially volatile assets of the ERC20 tokens for arbitrage opportunities that allow them to go. There are opportunities that exist because there's certain barriers between markets that are legal or geographical. Is that the right way of thinking of it?
Yeah, they're all in regulatory gray areas. So,
Sure.
That's where you find the best arbitrage. And if you can exploit it, it's not really the legal part. It's not like, oh, I don't have a passport or whatever, large funds that can set up entities anywhere. It's the liquidity problem. And the only people who have liquidity on this have been exclusively exchanges. And exchanges have had an unfair monopoly on the ecosystem. But DeFi platforms are allowing people to actually, as a fund, you don't need to have a workaround deal with a Binance or a Bitfinex. You can actually just go straight to a Celsius network. Hey, can I borrow some coins? I would like $10 million. I will collateralize it by $12 million.
Mm-hmm.
So for us, after 1 week at the settlement, right, we have 1 week weekly fix. So there's two options that happens. So your token and plus the interest, say you earned 5% on that interest for that week because we had huge demand for it, lots of huge deployments. So you will receive your token plus the interest returned to you. So if you had Bitcoin, you receive your Bitcoin plus your interest in Bitcoin. However, if it reaches past 110%, that will reach the over collateralization. And so the second advice is 10% above your initial price. So like an example is this ABC token is worth 1 TUSD at the start of the week, at the vesting period, and it pays 1% interest. After 1 week, ABC is worth $1.10. You will receive $1.11 instead in TUSD instead of ABC token. And you're always earning yield no matter the circumstance.
Okay, two questions for you. The first one is when you say 5 or 10%, you don't mean in that week, you mean APR, right?
Yeah, in APR. So that can change weekly depending on that week. So
Sure.
1 week
Okay,
you
gotcha.
might, based on
I
the demand
follow.
flux.
I just wanted to make sure we were talking about APR and not 5% returns in 1 week.
No,
Yeah,
no,
of course.
APR.
And then, so my second question for you is, I didn't quite understand this yet. You said that if the price of the asset you're lending were to go up 10%, you would be, and so let's say I'm the lender and I give you ABC and it went from $1 to $1.10. You were saying I would receive back, I would also receive back some TUSD?
No. So what happens is this is an insurance policy on us in case the price of it crashes or goes up, right? You can't predict if it will experience a 40% increase or a 40% decrease.
Mm-hmm.
So to protect them on the high side and low side, you will receive your token back in TUSD, pretty much. We will, instead of BTC, you will receive your equivalent value all in TUSD. If it's under the 10%, like it's a strike point basically. And if it reaches its strike point, you will return it all in your stablecoin, and you can convert that to whatever. If it's underneath the 10%, say it's only 8 to 9, you will receive in whatever token you deposited. So if it was a random ERC20, you'll receive it in the ERC20. However, if that token suddenly had a pump that week, then you would secure that into TUSD. That's to secure on both our side and on our lender side, so that to alleviate any price crashes.
Okay, so what you're saying is if the price moves outside of that 10% range in either direction, you will liquidate.
No, only if it goes up. We liquidate only.
Gotcha.
Yeah.
And so you would liquidate. Would you liquidate all of it?
Yes, all of it.
Huh. And so one thing that I'm thinking about this though, so you mentioned personally you're not into trading, but maybe you have some long-term hodls. So if I was holding one of these ERC20s because I thought in the long run it was gonna go up, wouldn't I want to avoid a scenario where it would be sold in that fashion?
Well, the whole point is, imagine, one of these ERC20s goes up 40%, right, in that week. You could able to secure your profits in the TUSD. It's like normally people always say, oh, I should have tethered, right? Instead of the user having to tether, we tether for them automatically to secure it for them. And then after their settlement, they can convert their TUSD back into whatever ERC20 that they really believed in, or whichever project. That's all up to them.
Sure. I guess what I'm noticing though is that, like, if the price went up 50% and didn't come back down, then I would buy back in that token in my preferred ERC20 token, but I would have less of it then, because I would have basically, you'd give me back $1.10, but let's say it's trading at $1.50 all of a sudden and didn't come back down. Now I would have fewer in that scenario.
Well, in
unless
that, no, you would still receive the interest on that.
I'd receive the interest, but if you sold the tokens at $1.10 in the middle of the week, let's say it pumped, then at the end of the week, the tokens are trading for $1.50. I would receive $1.10 plus the interest, which might be another penny.
No,
So that would be
no, no.
$1.11.
It doesn't. It doesn't. It only happens at the very end of the settlement. Only after that 7 days, what the price is at the end of the 7 days,
Got it.
at the end of the settlement week.
Ah, okay. Okay. So if the price were to go up substantially in the middle of the week, that wouldn't actually, it wouldn't trigger the liquidation.
No, it wouldn't.
Okay. And then, so how do you, if at the beginning of the week, the borrowers are collateralizing at 110%, and then the value were to go up substantially, how are we confident that they could afford to repay like, how are we confident that the collateral could cover the value of the token if they had sold it
If
somewhere,
it,
for example?
wait, can you repeat that again? Sorry.
Well, so let's say someone borrows this ABC token, and like that scenario we laid out already,
Mm-hmm.
and and then in the meantime, like the value were to go up a lot, it would go up so much that their collateral is no longer enough to cover it. Couldn't that scenario happen? Because you said they only collateralize 110%, right?
Yeah. So it's 110% of the value of your fixed deposit. Yeah.
So let's say the value went up of the ABC coin went up to 150%. Well, if I was a borrower, I would have an incentive not to repay it. I would just let you keep the collateral and, maybe burn my bridge
Oh,
with Pocket. But
well, no, it's it's plus the interest, and so that's the reason the 110% is so that, like, one of the questions is, all right, what happens if Pocket were to fail as a business? It's sort of like Celsius. It's you have to think, if Pocket were to like dissolve or go bankrupt, all the tokens, inclusive of interest, like accumulated during that period, would be returned to all users. Uh, Failing this, that's why we use the TUSD reserved as the collateral against the fixed deposit, so that it's tapped, so that no matter what, we can always repay our users in full.
okay,
You would just simply miss out on that week's interest.
I see. Okay. And so you said that the loans, when a lender might go on there and earn returns, they would I'm sorry, you said they were fixed rates on a weekly basis. So like that rate is negotiated, or it's based on some display when you first deposit your tokens, right? And it's not variable throughout the week.
Yeah, so I can just share my screen real quick, and
Sure.
you can see this. Share. So
Not
I
yet.
don't know if you can.
There we go.
Can you see my screen?
Yep. There we go.
Okay. So Pocket, as you can see, here's our annualized rate. So some of the more illiquid tokens like RLC, almost 38%. But this is, like I said, the liquidity issue. How liquid is a coin? Obviously, the more liquid a coin, the lower the rates we can offer. So something like Maker, we are offering 3.94 for that, and I would say Bread, BTC, right now it's weekly.
Oh, wait, BTC, I was saying like 18% up there.
Oh yeah, so this is annualized. Yeah, 18% annualized and 36 weekly. This is recently because of right now Pocket only launched this past summer, around June 1st. And so right now we're at, if you can, it'll come up. I think we're at 250,000 in deposits right now. And so we initially started out at, maybe in less than 3 weeks, we ended up having around $75,000 in deposits, or AUM. And so initially that was the growth, the rates were bad, since we didn't have the liquidity to provide to our borrowers. as the platform, we've been experiencing pretty steady growth. It hasn't been as fast as I would have liked, but it's been pretty much consistent. We've spent 0% on marketing, and it's pretty much all on word of mouth and conversations like me presenting and talking to guys like you and Defi Nation. And so recently, we're finding like we try to map Celsius's growth, and we notice it's a very exponential moment. You're going to experience very slow, consistent growth until you hit pretty much an exponential peak, and then you will explode. Sure. Like I think at one point, Celsius in spring was at 200 million AUM, and then that took them almost a year and a half after their huge ICO and everything. And then, less than 3 months later, after I saw them at Consensus this past spring, they were at almost 300 million in AUM. Sure. So that's how they're able to offer some of the rates they were. Also because they offered in their own coin, right, which is, I think, a little bit unfair. And in the advertising on the tokenomics of it, there's a reason we don't have our own token. Is just that we try to, whatever rates we offer or what we can do.
Sure. So can you maybe explain to me, a lot of the people in our community here are primarily lenders, and so we're very familiar with the lending opportunities that exist on Celsius and Nexo and Compound Finance and Fulcrum and DYDX and then some of the others. I guess I'd like to know from a lender's perspective, what opportunities would Pokket offer that might be better than what's available on these other platforms? Like what are kind of the value adds for the lenders?
Well, to be fair, disclosure, I do use all of them actually. I have. And so I actually tell everyone, don't just use Pokket, don't just use Celsius, don't use Fulcrum, don't use Compound, use it all. You need to have a basket, diversify like a good stock. Yep. And at the end of the day, all we are is just another option, in the fact that the biggest value add we have is that we have more options. We have more ERC20 tokens. Think about all the tokens that we have listed. You can go on any of your exchanges and think about, why am I holding this token on this exchange just sitting there? It's not earning anything. Yeah, I'm holding the token, but in reality, I'm not earning anything, just sitting there, and you're just waiting for something. So why don't you make it work for you? Sure. And so, and pretty much I'd say pretty much it's just another foray value add. I think for us as a product, we still need to, I don't think we're going to be serious until we're at like 5 or 10 million ohm to us. And I think that is when we will be able to offer really great options on the coins that we're going to be listing and some of the deposits we're going to. It's just that, the technology infrastructure to take on so many different chains and keeping up with their networks, it's a lot of tech debt. Sure. So we have to be very careful on which tokens we accept. Sure. But I say the biggest value add is we're at the beginning of the launch of our platform. So, right now is probably the best time to earn the preferential interest rates. So if you're one of those like credit card junkies that, I have 0% APR for 18 months and I want to gain airline miles for this 3 months. And like, if you only use Pokket for 6 months and your preferential interest rates are end and you take it out, that's fine with me. Sure. I say use every arbitrage opportunity as you can. And at the end of the day, I think as our service, all we can do is provide the best kind of product, customer service that we can to our users. And that's about it. And also being as transparent as we can with our cold storage, with our auditable wallets, and providing value for everyone.
Sure, nice. And then from the borrower's perspective, my understanding is that the borrowers they're not just your average crypto user. Do they have to pass a certain KYC?
Right now we're only working with institutions on our borrowers. Okay. So that's how we're able to, like I said, our team is actually very experienced. And so our main investor is actually one of our biggest borrowers as well. They have an OTC desk.
Okay.
and it's a hedge fund out of Hong Kong.
I see. Nice. Okay. Yeah,
And
that's
so,
cool. I appreciate having a kind of a different angle on this. And I, whenever I talk to a new project, like I want to understand what the economic advantage is that you're servicing, so then I can understand why you can offer good rates. You know, so as long as I can believe that there's like actually a way that you're making money, then I can feel more confident in as a lender. So yeah, I appreciate that there's different relationships that you're capitalizing on. That you
well,
explained.
we just thought, you know, some of the, like, a lot of times on a lot of these lending platforms, the biggest borrowers are margin traders, and you know that's a pretty high risk, high liquidation. You know, a lot of people get bid wrecked, and
Sure.
so we weren't trying to you know put that at risk, especially at an early stage. Eventually, we will expand to more, you know, other OTC desks, but I think for the long term, our borrowers are going to be pretty much only professional in the near future, probably next year or two, just to
Cool.
focus on our growth.
Yeah. Yeah.
And also, if you only need like 3 people borrowing if they're a hedge fund, and if they're borrowing $5-10 million at the time, and
Sure.
if they make their margins, who cares
Right.
if
Yeah,
3
absolutely.
people or 60? And the biggest value add for us is that I found in Asia, a lot of times in the crypto communities, people are less focused on the like they're less idealistic in the crypto space. They're more pragmatic. They just want what works now. What can I use with my tokens now, and how can I earn more tokens?
Sure.
They're not worried about, oh, how much decentralization is this project,
Hmm.
you know. And so to me, whether you want a centralized service, DeFi, or I don't think it's fair to have a 0 to 1. It's always, I think it's a 0 to 100. It's a gradient. And
Absolutely.
so initially we are coming out with somewhat a centralized model, but we are trying to transition most of it into more decentralized as we go on.
Hmm. Sure. Well, thanks a lot for telling us about that. I'm curious, Toma, if there's anything else that you think people should know, or maybe how they could find out more, or where your communities are.
Just check out Pocket, and actually, I'm gonna give a special link with you guys, and so if everyone signs up using that link, everyone will be able to get preferential interest rates for a short period of time. So
Baller.
you can go arbitrage and you know.
Take advantage of that subsidized rate for that window of time. I'm all about
I
that.
mean, at the end of the day, you know, as long as our users are making money, they're increasing the size of their wallets. It's only increasing the size of our own, and you know, it's a win-win for everybody.
Sure.
So,
Yeah, I like that. Cool, man. Well, yeah, thanks a lot for telling us all about it. And yeah, I'm gonna go check it out myself. Appreciate it.
all right, thanks for having me.
Yep. Take care.